So, $1 million brokerage account, most people are probably like, geez, how am I ever going to get to that level right there? And I promise you, it's so much easier than what you actually think. So, in this video, we're going to go through my account. It's currently $960,000 right now. It bounces all over the place, of course, because I'm very invested in the stock market. But we're going to go through my journey and exactly what I have open in this portfolio right now of how I got to pretty much $1 million, the strategy that I use, the stocks that I buy, the ETFs that I buy, the whole logic behind how did I get this to $1 million account just by investing under $100,000 roughly 6 years ago. So I grew from 100K to $1 million in 6 years by doing what I'm going to teach you in this video right now. So you could just see my status right here. I have this on a 2 year chart. This is the account value. So let's dive into the main brokerage account. And keep in mind, there is a few different brokerage accounts that are involved with this main Schwab account. So we're just going to go into the main one. I'm going to break down all the numbers so you understand everything that's going on, my cash, my cost basis, all the stuff that I have open. We're going to scroll down and I'm going to show you all my stuff going on here just so you could get an idea of how I actually did it and how you could potentially do this in your portfolio too. So we're just going to scroll down and work through things one by one. So this total account value is $880,000. Of course, I'm going to show you all the stuff I have open, all the stocks, all the ETFs, all the stock options, all the options that I bought, all the options that I sold. A lot of stuff we're going to go into, percent of the account. We're going to go through my margin requirement because I do a thing with stock options that not really many people understand, but it's one of the biggest hacks in investing that if I knew this years ago, this account would probably be like $5 million to be honest with you. But of course, it took me about a decade to figure out the system that I use right now. But now that I have it figured out, it's working very, very well. And you guys could use this system too. I'll explain that in just a second. So we have cash, 592 bucks. I'm not a big fan of having cash in my account because I'm in a camp that, cash is going to underperform in the long run. Yes, in the short term, the market could fall and cash will do fine. But I'm a long term investor and cash does not really have a place in my portfolio, of course, unless valuations get like totally out of control where it's like I have to put stuff in cash, I have to wait for this dip to happen potentially. But, timing the market is very, very hard to do. So I usually have low cash in my account. Market value $880,000. Of course, I said I have a few Schwab accounts, so that's why this is less than the total value I showed you earlier. Today went up $10,000 in this account. Total cost basis $535,000 and total gain $344,000 of unrealized gains. So here's the thing about cost basis, and then we'll dive into these trades because we have to clear this up real quick because a lot of people get very confused with this stuff online. So it's kind of like, let me just use an extreme example, and I know you want to get into the trades, and we'll do that in 1 second. Extreme example: I sent $100 to the Schwab account. I turn $100,000 into $535,000. I take the profit, I sell it. Now I have $535,000 cash in my account. What I do with that cash is, let's say I go buy shares of Tesla, whatever you want to buy. My cost basis on Tesla is going to show as $535,000. But that doesn't mean I sent $535,000 to the account. That's just how much I paid for those shares at the time that I bought them. So don't get this misconstrued of, oh, yeah, he sent $500,000 to this account. It's not like that. So let's scroll through one by one here and see what I got going on. So Triple Q and VOO, I have a good percent of this portfolio in those two companies right there. And this is what builds the base portfolio, which is so, so important for people to understand. You have to have some sort of foundation in your portfolio. You don't just want to send $1 million to an account and say, oh, I'm only going to buy Tesla stock and I'm going to buy call options on Tesla stock. Yes, you can make a crap ton of money doing that. But in the event that you're wrong and Tesla goes down, you're going to get totally wiped out. You don't want to allocate like that. You want to have a little bit of diversification. So we don't want to have too much diversification, but we'll get into that in just a second. You want to be diversified, but at the same time have conviction in certain companies, and you want to place your eggs in certain baskets to give you the highest risk adjusted return. So VOO and Triple Q, good chunk of money in there. This one is roughly $338,000, 336 in VOO. And you can see that's roughly 37% of my portfolio for Triple Q and 37% for VOO. That's all good stuff. We understand all that right there. Now, if we scroll down, you're going to see the next holding that I have, which is Tesla. So I currently have, which I showed you AMD there a little bit, but we'll get to that in a second. I currently have 350 shares of Tesla, which equals roughly $116,000. So I bought these shares a few years ago, and my average cost basis is 154 bucks per share. And now you can see Tesla's at 317. So we're doing pretty good on those. But, it's 12% of my portfolio. Tesla just reported earnings. I just broke it all down in Discord if you want to check it out. Link below is for free. But Tesla reported earnings, and the earnings were honestly pretty bad. But the key thing for Tesla is this: it's all based on their future valuation. It's all based on what's coming. Optimus and the Robotaxi network. If that scales, Tesla's going to do fine. If that doesn't scale, Tesla's going to do bad. And the key thing to understand is yes, it's 12% of my Schwab account, but I have other brokerage accounts that have a similar value as this one, and I don't really have that much Tesla in those ones. So it's like overall on my net worth, this is well below 10% of my net worth. But I do have conviction in the stock. I mean, I bought it for 154. It went up to what, like 475 a few months ago. Now it's down to 317. You have to have conviction in stocks like this because if you don't, the second that it goes down, you're going to read a negative news article. It's going to scare you and panic you out of the stock. You're going to panic sell and you're going to lose money. So you have to have conviction. So 12% of this portfolio is in Tesla. Now, if we scroll down a little bit, we have AMD, and I keep giving you little hints here. There's TSM hiding behind there, but we'll get to that one in a second too. AMD is a good one. You know, AMD is kind of like an NVIDIA. I think AMD is a little bit cheaper fundamentally. I have 213 shares, and that equals roughly $33,000. Now, without getting too much in the weeds on AMD, I did not pay for these shares of AMD. I got these shares for free. And you're probably wondering, like, how did you get those shares for free? And I'm not trying to clickbait you till the end of the video, but I'm going to tell you exactly how I got them for free and how you could get those shares for free too. There's no BS here. This is not me blowing smoke up your butt. This is 100% legitimate how I do this stuff with stock options, how you could get these shares for free. So AMD, let me just blow through a few more of these things. There's not really much left because the market's a little bit expensive right now, and I don't have a lot of exposure right now. But I want to blow through this, and I'm going to tell you how I got these shares for free. So AMD, I love it. They design chips. They don't build them. If we scroll down a little bit, TSM is the one that builds them. I think they're both fundamentally relatively cheap. The growth is good. I think the story's there. AI is going to keep going into the future. It's good. Now, if we scroll down a little bit, you can see that I did an option trade on AMD where I sold some puts. That's why it's a negative number right here for the contracts. So essentially, I got paid $9,543 upfront. So that went to the cash balance of my account to sell these puts on AMD. So I got paid to sell this option contract. Now I'm going to come back to that in 1 second. I'm really building you into this, how I got these shares for free. It's going to blow your mind. NVIDIA, if we go down a little bit, I have a little exposure to NVIDIA. United Health, I have some calls on that. Again, United Health, it's not a big percent of my portfolio, just roughly like 2% on those calls, but we're doing okay on those so far. I have some JD calls, very small percent of my portfolio. Meta, a few shares. Amazon, a few shares. I did sell some $800 covered calls on Tesla. Well, they're almost fully covered. I sold 4 contracts, so that's 400 shares, and I own 350 shares. So pretty much fully covered right there. And then I'm down a little bit on these 2 trades right here. I sold some puts on TSM, and I bought some calls on CNC. Again, I think those will be fine. We just have to be patient with it. And at the end of the day, the calls that I bought, very, very, very tiny percent of my portfolio. So let's cover how I got these shares for free. And I really want this to click for you guys here. So just let this click. When I sell puts, I'm getting paid up front. And this video is not going to explain the intricacies of selling puts, but really it's not that complicated, to be honest with you. When I'm selling puts, I'm getting paid up front to sell that put contract to potentially buy someone shares in the future at a certain price and a certain time frame. So if we just go back to this contract, we'll go to the AMD sold put. I am forced to buy someone shares for $110 per share anytime between now and 6/18 of 2026. But the current price of AMD is 161 bucks per share. So they're never going to want to sell me their shares for 110 bucks per share. Of course, why wouldn't you just want to go sell them in the open market for 161? You would. So right now this contract is worthless. But here's the benefit of doing these sold puts. Number one, these are not cash secured puts. They are portfolio secured puts. So when I'm selling these puts, how do I secure the trade? I'm securing the trade with my base portfolio right here. So when I sell the put, I'm using my margin buying power as collateral to sell the put. I'm not collecting margin interest. I'm never actively on margin. I'm just using my base portfolio as collateral to take assignment of these shares if I have to. You're going to be like, again, Brandon, if you get assigned these shares, like the people that know what this actually means, if I get assigned shares, where am I going to get my cash from? Well, you could see this is roughly $700,000 in the base portfolio and $100,000 in Tesla. So just say 800K, $800,000 of cash right here. And I'm on the hook to buy 1,000 shares of AMD at 110 bucks per share. So that's $110,000. All I'm going to do is just go sell some shares in my base portfolio to generate cash to take assignment. But here's the key thing how I get these shares for free. And this is what should really blow your mind. I got paid, which for this specific trade, I got paid $9,543 up front for selling this put. I'm not on margin. I'm not collecting margin interest. I'm just using my base portfolio as collateral to do this. So when I feel like AMD is cheap, I sell the put, I get this money in the cash balance of my account, and then I go buy shares of AMD with that money that I received. So typically what happens is if you do this correct, if AMD is trading below intrinsic value, if they have a moat, if they have pricing power, if they have a durable competitive advantage, and I'm okay to hold this company for the long run. If you could pass the test rate there, you're probably going to make a lot of money doing this. In AMD, when I did this, I sold other contracts that are just closed out right now. I think the one where I think I sold like a $25,000 AMD sold put, and you can see my cost basis on these shares is $24,000. But when I sold the put, I think I collected like $30,000 in premium. The market went way up since the April 8th dip. And then I bought the contract back for like $6,000. And I basically just have $24,000 of cash left over in my account. I sold something for 30,000. I bought it back for 6,000. I have $24,000 left over in profit. So when I sold that put, I took the majority of that money and I bought AMD shares because I felt like it was cheap because I sold the put. And if I feel like it's cheap by selling a put, it's cheap to buy the shares also. And I know I'm kind of going through a lot right here, but just kind of roll with me and I'll bring it back together. So I sold the put, got the cash, bought shares. Everything was cheap when I did it. But now I have these shares that I bought for 24K. They're up $9,400 and now they're worth $33,000. So I'm up 38% on those shares since I bought them. Here's the key thing to understand. I didn't send any money to this Charles Schwab account. I don't send money to this brokerage account because SIPC insurance is only 500K. That's why I have other brokerage accounts. That's another story to talk about, to be honest with you, but it's pretty simple. So this $33,000 of market value, it's essentially free money. If you sell the puts right and you take the premium, the cash that you receive and go buy shares, you're probably going to be fine. Now, here's the thing that just like blows my mind that most people don't understand, and this is probably going to change your life. Let me just flip back. These shares of AMD, $33,000. These are free shares. But does it stop right here at $33,000? Do you think AMD is going to be more valuable in 5 or 10 years from right now? Probably. What about Triple Q or VOO or TSM or whatever other shares that I acquired for free? Are they probably going to be worth more in the future? Yeah, of course, probably. So if you agree with that, that one trade that I did months ago, I'm going to be profiting from that same trade year after year after year after year after year. Maybe not every single year the stock's going to go up. Yeah, stocks don't go up every single year. They go up, they go down, they go up 40%, they go down 40%. But in the long run, am I going to have more money or less money? I'm probably going to have a lot more money from these shares that I didn't even pay for. And I know this was kind of a lot, and this is kind of a different video than what I usually do. But I was just talking about this on Zoom last night with the people that are in my Discord. And I'm like, you guys need to understand, I didn't pay for these shares. I'm going to be making money on these companies for year after year after year after year, as long as they have a moat, which it does, pricing power, which it does, durable competitive advantage, which it does, and I'm okay to hold it for the long run. And of course, I paid a fair price. I'm all about paying a good price for a great company. A good company is not always a good investment. You have to pay a good price for the company. So again, I know I talked about a lot right here. If you want to watch another video that goes a little bit more into detail about this strategy, watch this video right here. It's going to help you guys out a lot, and I'll see you guys later.